Your clients are either about to save some serious money in taxes or you're about to watch them blow their hand off. Hi, I'm Tyler Otto, president and founder of Specialized Accounting, a 15-person accounting firm that in 4 years we grew from a one-man shop to a 7-figure company, and we've bottled up everything that we've learned, all the pain, heartache, and destruction that went along with growing a firm, and gave it to you so that you can have the turnkey firm of the future in what we call the Firm Foundation. Okay, team, today we are covering credit cards because it is one of those tools that some clients seem to be able to ruin their lives by using, while others know how to use them like a masterful tool. It's like you tell your client they're about to go mining for gems, and some of them can just go out there with a pickaxe and do fine. Other ones, you're terrified of giving them dynamite to really go after the riches because you know they're going to blow their hand off.
Cause I have $30,000 in credit card debt.
So, let's talk today about the pros and cons of credit cards in the business and how they can get tax savings and even more benefits out of this. By the way, you might even learn something for yourself. So let's dive in. First, a lot of proponents out there will tell you credit cards should not be used. Like, debt is never good. And I agree with them if the client carries a balance, which is why we're getting to rule number 1, never carry a balance on a credit card. You are telling your clients this from day one, and if you are a business owner yourself, but every benefit of using a card gets negated the moment you are paying interest. The interest is never worth it, so rule number 1, never carry a balance on that card. Rule number 2, never commingle on a single card. Yes, we're going to get into some rules here because you can actually use some business cards for personal and some personal cards for business. But if you open up a new card, never put both business and personal on the same one. To quote Bob Hope,
Stop it!
And rule number 3, never, ever let your clients spend because they're getting points. Never worth it. I hate to hear people say, hey, I had to spend $3,000 because it was going to get me a free snow cone at the end of the game. So let's talk about the benefits. First and foremost, let's say you or your client opens a card that gets cash back. Well, you as the bookkeeper have the ability to save them in taxes because the rewards that a business owner gets on those credit cards, the cash back, should be labeled below the line as non-taxable income. And that non-taxable income, if called out correctly, is going to be saving them on paying taxes at the end of the year. Too often, though, we'll see mistakes where people hide that money in other income. It ends up getting reported with everything else, and they end up paying taxes. But wait, what if they don't get cash back? What if they get points? Well, this is where the ultimate fun resides, because business owners can get points off of business cards, but they can redeem them in their personal life and get the benefit. This opens up the strategy. The strategy for our clients is always spend money on business travel, but redeem the points and miles on personal life expenses. This is the ultimate business hack for business owners. And what's so special about business owners? Well, there are a lot of great credit cards out there that allow you to sign up for benefits and points only if you register it under a business tax ID. Which brings us to another question. You're probably like, well, I don't want to put another credit card on the business. And this is fun because you don't have to put a business card on the financials. Let's look at Tyler Otto and family, for example. In the last 3 years, we've opened 14 credit cards, 7 of which are business cards that we only use for personal expenses. We use those because then we get the sign-up bonuses of extra miles. Now, don't come at me, people, if that's ruining your credit. We'll address it for you here in a minute. But by getting all these points through the business, by opening a card under business, we are able to then get all the rewards and pay for family vacations strictly on points alone. This goes back to our rule. You can open a business card or a personal card, but you don't have to spend business or personal. Just pick one lane and stick to it. But stop.
Stop. Hammer time.
No, not that stop. Wait a minute. A lot of you are all ready to come at me in the comments saying you will tank and destroy your credit score by opening up that many cards. And I'm going to say, I used to be on all of y'all's side. Not until that the Auto family got involved with this, and we again opened 16 cards over the last 3 years, but we never carried a balance and we never spent money because of points. We just kept our routine spending. So to help alleviate your fears, let's talk about this because there are 5 items that affect your credit score. First up, 35% of your credit score comes from your payment history being on time. That's it. You want a third of your score to be perfect? Pay your credit card bill. Don't run it up and just get it paid off. Second, another 30% is called your utilization ratio. That means we look at how much credit card spend you have available to you and how much you use on average per month, which for those playing along at home, let's say that you have 10,000 in total credit cards available to you and you spend 6,000 a month, you're using 60% of your ratio. Meanwhile, the more cards we open but do not spend extra on increases how much spend we have available. And that same $6,000, if we have a total in 100,000 credit available to us, we just went down to a 6% utilization ratio. Already, we're at 65%, 2/3 of our entire credit score has already been decided, and we see nothing about opening new cards. Item number 3, 15% of your credit score comes from how long your longest card has been open. So I still got the Capital One from my 20s. Leave that longest card open and leave a Netflix subscription on it if you want, or maybe your Beanie Baby fan form fiction subscription. I don't know. You do you. I'm not here to judge, but leave that longest card open. And if you're not incurring annual fees, I would say cut up that card, but still keep it open, or close the account after a year if it has an annual maintenance fee. Item number 4, types of credit factors in. Mortgages are good debt, and store credit cards are bad debt. Stay away from bad debt. And lastly, we get to number 5. 10% of our credit score comes from new accounts opened in the last 2 years. Ladies and gentlemen, I can tell you my score is consistently over 800 with the 16 cards we have opened because my utilization ratio outweighs the new accounts. If you want to learn more about the credit card game, I am no expert. I am only the benefit of someone who is an expert. So we're going to put links to those podcasts in the description, but let's move on to the final thoughts. First off, if your clients need help with credit card spend, get them on a tool like Ramp or Relay or Brex or any other one of those companies that allows your client to help manage employee spend in real time and put rules and conditions. I often advise business owners never let their employees have a blank credit card. Get them on a spend management program like one of our favorite providers. And if you like us, click one of the links below so we get a small little kickback for you using our referral link. But to close it all out, the big 3 rules. Say them with me now. Never carry a balance, never commingle funds, and never spend because you're just getting points. Now, can't wait to dive into this and other best practices for running a firm with you. So we'll see you at thefirm.foundation and on to the next one.